Today on 21st Century Business, explore state-of-the-art technology, innovative business strategies, insights from cutting-edge corporations around the globe, a visionary look into the answers of tomorrow, today. Business leaders, business solutions, 21st Century Business.
Welcome to 21st Century Business. I'm Jackie Bales. Global demand for oil and gas rises every year, and the demand in developing countries like China and India is skyrocketing. So the price continues to rise. Meantime, major shale oil discoveries in the U.S. are booming, and now private investors can partner with small oil and gas companies in the search for this precious commodity. To learn more, we're joined now by Waylan Johnson, president of Texas Energy Group. Welcome, Waylan.
Thank you, Jackie. It's good to be here.
Can you give us a brief rundown, Waylan, of the supply and demand issues the world faces as the demand for oil and gas just keeps going up?
Well, the question is part of the answer you just gave, supply and demand, the age-old question. And what's going on in the United States is we've been importing oil for many, many years at a large percentage. And currently, I'd say over the last 10 or 15 years, we've seen the countries you mentioned, China, India. These countries are basically, in short, to be like America, and they're 50 years behind our society and our growth and the things that we're doing. So it's a global demand, and the supply is limited to areas, and the United States is a large producer, but obviously we only cover about 40 or 50% of our demand, much less the global demand.
So tell us who Texas Energy Group is and what you offer in the hunt for more oil and gas.
Well, Texas Energy Group is a company that has been around for quite a few years. I've been in the oil business 25 years myself. And Texas Energy Group is owned by me. And we've got an eclectic group of people that's in our inner circle of engineers and geologists that help us guide the company and grow it. And we basically use private funds and drill very developmental type, lower risk. We're not wildcatting, as you've heard the word, not trying to reinvent the wheel or rediscover new fields. But there's a lot of places. I find it funny that a lot of folks think, well, where do you drill in Texas? Well, you can drive for hundreds of miles in Texas and not see an oil well. And a lot of folks don't know that. So there are a lot of places to drill, and Texas Energy Group is basically finding oil in a lot of fields where oil has already been found, which is a good place to look.
Interesting. Well, let's take a look at Texas Energy Group's drilling operations in this 21st Century Business Field Report.
Finding and developing stringently vetted and thus highly prolific oil and gas plays is key to the success that Texas Energy Group brings to their Today, at their Sinclair well in Liberty County, Texas, TEG President Waylan Johnson inspects the operations along with Mark Bays, co-owner with Mr. Johnson Resources, which is TEG's affiliate field operator.
We're actually on the location of the Sinclair #1. It is a well that is operated by Resaca Resources, the affiliate of Texas Energy Group. The well itself is located in Liberty County, Texas, which is southeast Texas. And we're about probably 5-6 miles south of the town of Cleveland, Texas, located on Highway 59, about 40 miles north of Houston.
Right here is taking this rig to its capacity. We are TDing this well at 7,350 feet.
Texas Energy Group, like most smaller companies and even the larger ones nowadays, choose to lease rigs. It's obviously a large expense, tremendous amount of employees and the things that goes along with dealing with employees. So especially for Texas Energy Group, we choose to spend the monies that we have available more on technology, geophysical efforts of finding prospects, finding oil and gas, and it just works a lot better to use contractors for the actual drilling application.
Being a smaller organization has helped TEG move with agility, making smart moves in the market that are backed by the latest in technology, all of which lead to big payoffs at the well site.
Well, probably in the scheme of things, smaller oil and gas exploration companies do not compete with the larger companies simply because normally they don't have the funding or the backing to do so. When you talk about shale plays, for example, the Eagle Ford Shale, the Barnett Shale in Texas, those are large resource plays, horizontal, big fracs, big money. A lot of times you have public companies, Wall Street funds that are involved in those. The little companies in Texas, family owned, maybe second and third generation, they tend to be a little bit more conventional in their substance and what they're doing. As we mentioned, what you're watching here is the drilling of a 7,300 foot vertical well. In the life of a well, that's kind of a shallow well, although, you know, it's 1.5 miles in the ground, considering some wells are 15,000 feet deep. So Texas Energy Group chooses to play in more of the conventional area where we're not competing against those dollars. Therefore, we do a lot better job. Our profitability is better, and the prospects and the quality of them tend to be much better. Where we're standing on the Pelican number 1 is a typical prospect. This was about a 9,000 foot well. Things that we do out here in the area are 6,000 to 9,000 feet, usually. And predominantly we are looking for oil. We chose about 3 years ago to focus on oil, not gas. And we usually, in drilling 6, 7, 8, 9,000 feet, we're looking for not one, but possibly 2, 3, or 4 potential targets. So you get a multi-layer advantage, I guess.
Superior research capabilities have helped the Energy Group hold to their mission of finding oil and gas the most economical value to their customers.
Well, believe it or not, the time frame to put an oil and gas prospect together could literally span over a couple of years. We've seen that before. It could be 6 months, 10 months. The idea is developed, it's put on a map, the land department gets involved, they have to go lease the minerals, and then it turns it over to operations. We have to build a location, drill a well, and complete the well, and then begin to produce it. So from the time it starts in its infancy till it finishes, could be anywhere from 6 months to 24 months. From the time we actually drill a well until we actually have cash flow coming back to our partners, usually probably in the 90 to 120 day range. Cash flow and profitability are obviously always the number one concern. You're investing money in the ground, you want to get it back in a reasonable amount of time and make a return on your money. And most of the prospects in this particular area that we're working on are probably maybe a minimum of 10-year lifespan to upwards of 20 to 30, maybe even 40. There are wells in the area that have produced longer than that. Our goal as a company is to be sure that we recoup our costs that we put into the ground in a reasonable amount of time, and then hopefully over the period of time we're making a 2x or 3x or 4x on the return of our money for our partners.
Texas Energy Group's policy of drilling lower-risk oil and gas prospects, such as here in Liberty, Texas, continues to ensure that their long-term investment partners will enjoy a portfolio of oil and gas properties that generate returns for years to come. For 21st Century Business, I'm Tim Michaels reporting.
Waylan, how strong do you think the future is for oil and gas exploration in the United States?
You know, for the fact I've been doing this 25 years, Jackie, I would tell you that the opportunities that we see today in drilling opportunities, in buying production that's already, producing fields that are already there, the opportunities abound. We don't have enough money to invest in our checkbook, so to speak, that the opportunities that are out there today. So if you're in the business and you've got a good, talented group of people around you, the opportunities are there to go drill and find a lot of oil and gas.
How do you feel the smaller oil companies fit into the growth of drilling for natural resources versus, say, the oil giants like BP and Exxon and Shell?
Well, that's David and Goliath, obviously, but those guys, it costs them a lot of money to cut a check. And so they've got to go look for a large oil reserve and a large place to set up housekeeping, so to speak. A small company can go in and drill 2 or 3 smaller wells. We can spend money in places they wouldn't think about spending money. And I guess the old comment of crumbs off the king's table. There's a lot of crumbs out there right now. And so there's a lot of places where small companies can have a competitive edge where the larger companies would not even be in that arena with you, so you're not competing against them.
Interesting. So those crumbs off the king's table as you speak sounds like that would be a good investment opportunity. Sounds like there might be enough crumbs to make that a good investment opportunity.
Well, staying with the theory, there's a lot of crumbs, yes. There is. But we've been very fortunate in our company that over the last 2 or 3 years, even drilling what we call lower risk developmental type conventional wells. We do a lot of vertical stuff, and obviously horizontal is what's in the news. That's the buzz phrase of oil and gas. And but we do a lot of conventional stuff, kind of old school. And in doing that, we've actually gone into oil fields and we've found a structure, which is something that captures oil and gas, and we've simply drilled deeper on that structure. Maybe the old timers got to the first pay zone, and maybe they stopped. They didn't go deeper because they made oil there. And we found that we can go into some of these structures and simply drill deeper on a known structure and make discoveries.
That's really interesting. So it sounds like you're saving money then in the initial search. You're going where oil already was found.
Our finding costs can sometimes be dramatically cheaper than not even the Exxon and the BPs, but just larger oil companies. Our finding costs can be a lot cheaper.
Waylan, you've painted a dramatic picture of the excitement going on in this sector, especially with the smaller companies. Thank you for sharing your knowledge.
Thank you.
And thank you for watching. For 21st Century Business, I'm Jackie Bales. And we'll be right back.